So we already established what the purpose and the value is of the asset components of the balance sheet. So if you recall, if you've looked at video number 1, we started with the asset section and we rolled through the definition and purpose and the visibility that you get in the current asset section. And we worked our way through just discussing some of the issues with inventory, if that's relevant to your business, and what you need to see and how you need to value it. We talked about capital assets and the importance of depreciation and why you should be reporting this, and how your readers of your financial statements interpret that information. And we briefly just touched upon other non-current assets as well, and how all these components roll up into your total asset figure. So now the next component of the balance sheet is the liability section. So in relatively simple terms, liabilities, people that you owe money to. Very simply, when we think of what could be accounts payable, so this could be your utility companies, your cell phones, your hydro, your vendors, so people that you're buying products or services from. All of that can roll up into this one particular account, accounts payable. And typically you're going to find it listed as the first account in most of the liability sections of the balance sheet. And similarly to accounts receivable, you have to make sure that you are giving enough time on a regular basis to go through the details of your accounts payable. So like I said, going down the road in the weeks to come, I'll show you what these schedules should look like and how you should be reviewing them and going through the information in your accounts payable. But what I really want to stress is that, if you are a business that's already got momentum and you're growing and you're looking to try to manage these things yourself, then the first tip that I want to give you is that if someone else is doing your bookkeeping or your accounting for you, make sure that when they send you your statement, you're not just looking at this number as a whole and asking maybe just, high level of, okay, what is this? Get into the granulars and ask for the supporting section. If they're using software, for them, it's just the click of a button to give you that report. So you know exactly who and what vendors are making up your accounts payable figure, and you need to stay on top of that. If you see a trend within your business where this figure is consistently growing, but your buying patterns haven't changed, then there's an issue, because it means you're not paying your bills. So, or your costs are becoming out of control, meaning that your vendors might be changing the pricing on you, anything that's outside of your power. Whereas, you can control how much you pay, then you can control this accounts payable amount. But if your vendors are changing pricing on you, that's beyond your control, which is why you kind of need to make sure you dedicate that resource and continue to look at this figure as often as physically possible for you, because this is a great risk for many companies if we're not paying attention to it. So other different components, this is just a random generic that my software system spit out. So if you have import fees and whatnot, these are things that you want to have separated, just so that you have visibility. I talked about this within the asset section as well, but for example, if you do have a lot of import fees and whatnot that you pay if you're getting your products outside of your local country, then you need to report these separately, so you can just keep an eye on what these amounts look like from period to period, and see if it's time perhaps to look at sourcing locally. If this vendor or supplier still works for you, burying your import and duty inside of your accounts payable doesn't really show you any trends. And again, there's going to be more on trends and some of the questions that you should ask as managers and business owners. But again, wherever you have unique type of payments, if you can separate them, it's just more visibility for you to be able to ask questions and maybe make some changes within the business. The next one is bank loans. So typically, what we want to do when we have loans with the bank is whatever your payments that are due within the next 12 months are. So if you owe the bank, let's say $500 a month on a loan, what you would do is take 500 times 12, which is 6,000, and you would report that as the current portion. So here we have another number, but let's say that's 6,000. We're going to report it as the current portion, because if we go to the bank and we want to ask for more money, they want to know what are your immediate current obligations, and this is how we show it to them. Okay, so by breaking out, even if you owe a total of 30,000, we would put 6,000 here in the current portion, and the other 24,000 would fall into this long-term section, and we would put it down here. So now we have a little bit of visibility. So if you are asking someone to invest in your company, they need to be able to see what are your cash flow obligations beyond a year from now. That's this figure. And what are your cash flow obligations within the next 12 months. And this is why we have this current versus non-current reporting on the financial statements. So if you have any bank advances, same idea, you'd report them. If you have credit cards that you need to pay, isolate them by each individual card. Again, this just gives you greater visibility. The more you have, your particulars broken out, the more you're aware of exactly what your position is with each one of your vendors, whether it's a supplier or a credit card holder, whatever you can do to give yourself access to information at your fingertips. This is what you want to do. You don't want to put yourself in a position where you say, I didn't have the details, and then you make the wrong decision. Start from the beginning, set up your reporting, set up your financing, your bookkeeping, your accounting, as detailed as possible without getting in over your head, and it'll just serve you better to make better business decisions. Vacation payable, corporate taxes, all of these things. Okay, we do our tax returns. Hopefully we are getting money back, but if we have a successful business, we're going to have to owe money, and you would have to report it as well as liability. You have employees, you must report vacation payable to them based on what the requirements are for where you live. EI, this is Canadian, so employment insurance, payable, CPP, federal income taxes, all of that, the sum of it all is provided to the Receiver General. If you're in the US or elsewhere, the same, whatever your employment deductions would be, make sure you have them reported individually, separately, stay on top. The last individual in this world that you ever want to have any conflict or confusion with is the government when it comes to employee deductions. It'll just open you up for issues, audits, the whole 9 yards, and it's really just something you want to avoid at all costs. More employee deductions of sorts. Again, within most computerized accounting systems, if you have unique payables that are not part of their generic listing, you can just go in and define whatever you want as a payable, and you make your reporting as relevant to your business as you possibly can. Sales tax, another component to the government that we owe, and there's a whole formula for how we determine if we owe or are getting back any portion of our sales tax, and you'll find that as well within your current liability section. Prepaid sales or deposits, we know hopefully by now that those are also considered liabilities. If your customers are paying you in advance for any goods or services, you cannot report the entire amount as revenue when you receive the cash. There are laws under whether it's IFRS or ASPE that require that you have to, that's called revenue recognition principles. You must report revenue when you've actually delivered the good or service. So if you have a service over 12 months, you have to prorate that revenue over the 12 months. Okay, if you're preparing your financial statements on an annual basis, then you may not run into this issue. But if you're preparing quarterly, monthly, then you will have to do this proration to make sure that you're following along with revenue recognition principles. And this will cause you an issue again when it comes to going to the bank for money, if they're scrutinizing your financials to determine whether or not you're a candidate. This will become an issue when it comes to the government, potential audits, looking at the way you've chosen to report your finances. So being aware of these rules is really important for you to ensure that you're not making any of these mistakes and running into any issues that you'll have to go back and fix, or most importantly, that may have a tax consequence allocated to it. So those are your current liabilities. Again, all items that you must pay that are due within the next 12 months, you would make sure that they're reported within this total current liability section, and it just gives you visibility, or readers of your financial statements visibility as to what your obligations are within the next 12 months. Long-term liabilities, so briefly touched upon this one already. Anything outside of the 12 months, so the portion of your loans outstanding beyond 12 months, mortgages payable, typically 20, 25, 30-year terms, you'll have those valuations and you'll report them within this section. Another common one, if you're many private companies, especially if they're operated by 1, 2, or 3 shareholders, often in time shareholders may need to invest within the company, and when that happens, you actually report it through a typical account that's called loan from shareholders or due to shareholders. So that will find itself here within the long-term section of the balance sheet as well. And the same with all the other areas within the balance sheet. You will sum them so that your readers and yourself will be able to very easily and simply find what that total number is and be able to make decisions based on that number. And then we sum the total of all long-term plus the current to get our total liability number. And, like I said, from there, it's really a critical piece of information when it comes to lending. So it's really important because I see so many posts all over online, people that want to get capital or someone to invest in their company without this balance sheet and this information laid out in this particular form. You can walk into a meeting and explain your passion, your desire, how successful you've been and your plan for the future, which is all wonderful, but you need to be able to speak to these financials. And that's why it's essential that you just take some time to really look at the information that you have before you. Learn it for yourself, whether it's watching tutorials, whether it's reading books, or whether it's going to your trusted advisors and going back and really asking the questions. It's imperative for you, for the success of your business or for your success within the role that you're completing, that you understand exactly how this information is being used, what is the purpose, where else it's flowing through the business. Remember, if you can't figure out the proper way to report your liabilities or your assets on your balance sheet, it will hold you back from obtaining capital, and it'll hold you back from one of the most important things, which is making the best strategic decisions for the business. If you don't have visibility to this information in front of you to look and take 1 hour and to speak to your managers or your team members and ask, why are these trends moving in this direction, you're not going to make the best decisions for your business. And I think that the more you can think about that and invest your time in developing your financial literacy, it's just the better off that your company will be for it. So I encourage you to continue to rewatch, ask questions, post in the comments, visit the website www.balancethe5five.com. Look for me on social media at balancethe5.com. Stephanie Riccio on LinkedIn. Always willing to answer any questions, and I'm going to continue to build these tutorials for you guys as we go along. Good luck and all the best with your businesses.